Let's get a preview of the key things to watch for. And of course, for that, we bring in Alison Williams, Bloomberg Intelligence Senior Banks Analyst. Alison, you heard Tree tell us what Goldman's strategy is going forward in the medium term, and I'm sure in the near term as well. But these are things that are not going to show up in the earnings report this week. What is the big thing that investors will watch for from Goldman this week?
So I think that investors will be watching for sort of progress towards this strategy. And so one of the things that management talked about was pulling back on some of the efforts, really narrowing the consumer focus and focusing on the alternatives business and that strategy, and focusing on the core institutional business. So from a strategic point of view, it looks like we're close to done in terms of selling the Marcus loans, announcing the sale of United Capital. That won't close until 4Q. That'll have a gain. And in the third quarter, there will be some noise taken around GreenSky, which they announced they're going to sell. That doesn't close until 1Q, but they're going to be taking some marks within the quarter there. But we see these as a positive as they do get to, focus on the core institutional and asset management. Terms of, oh, sorry, go ahead.
Sorry, Alison, I thought you were done. But in terms of the IPO market, there has been a little bit of life, and Goldman has been participating, right?
And I think that's really a key question for Goldman Sachs. So in September, we heard from several managements, not just Goldman Sachs, that things were starting to percolate. We did see a few high-profile IPOs come to market, and we're hearing that there's a lot more activity beneath the surface that's looking positive for the outlook. So keep in mind, it takes time for these things to materialize, especially with regard to M&A. So for this quarter, it's going to be a weak quarter on a year-over-year basis for M&A, but what's happening beneath the surface that bodes well for 2024. Also, an expected sequential steadying and then perhaps gains in advisory. So we did see that at the banks that reported last week. M&A, Goldman is the revenue leader there, and so they will be a beneficiary as that business sort of comes to life. Or back to life.
What about Bank of America? Tim Stenvick, Carol Massaravani, and I were talking earlier about how Bank of America is a really good read into the overall U.S. economy. They have their fingertips on the consumer and consumer spending and demand from consumers, and how that's shifting as the economy continues to or is expected to continue to slow down, even if it has kind of defied some of those predictions. What are you looking for there?
So what we've seen and what we expect to see at Bank of America is relatively resilient net interest income. And what's important for these banks versus, say, the broader regional universe is card. And consumers are working down some of the excess balances that they had related to all the stimulus. So they're still spending. Spendings are healthy levels. But at the same time, some are starting to revolve some card balances. That's contributing to the net interest income resilience at these banks. It's a very different cycle for card. It's a different cycle for consumer. And so we expect that remains resilient. On the credit side of things, so when we think about losses, this is really the key thing I think that investors are worrying about going into 2024 and 2025. But the results this quarter were better than expected on that front as well, especially JP Morgan, where there was expected to be about $1 billion of reserve building. There was actually a reserve release there. We don't expect that at Bank of America, but what we do expect to hear is credit still very solid. So net interest income resilient, credit very solid. However, what the stocks are worrying about is the future, and as rates are higher for longer, how does this shake out?
Yeah, and I mean, you mentioned the consumer, and obviously we'll get retail sales data tomorrow and so on. We're getting our own picture about the consumer, but there's also commercial real estate. Alison, what details will the banks share with us about, how difficult it is for commercial real estate these days?
So commercial real estate is weakening. It's still very small, again, in terms of the overall credit loss picture. But we are seeing, Wells Fargo talk about sort of the risks there broadening out, or the weakness broadening out, say, versus 12 to 18 months ago. So It is something we're going to continue to watch. We're not seeing dramatic impact to earnings, but we do expect that that's an area that continues to weaken in the quarters ahead.
Alison, really appreciate it. Alison Williams of Bloomberg Intelligence giving us a preview on what to expect when Bank of America and Goldman Sachs report their earnings this week.